It's new and it's different. A special edition of the Business Forum on Tuesday, 22nd November at 3 p.m. sponsored by the Trinidad and Tobago Unit Trust Corporation. With host communications specialist Sandrine Rattan. Her guest is Mr. Joydeep McClergie, director at Standard & Poor's Rating Services Sovereign Ratings Group. The topic is the socioeconomic landscape of regional and international economies. It's a program not to be missed. Be listening for rebroadcast of this program on Sunday, 20th November at 6:30 p.m. Sponsored by the Trinidad and Tobago Unit Trust Corporation. Right here on Power 102 FM.
It's now 3 o'clock for Midtown Port of Spain. Good afternoon, Trinidad and Tobago, and as promised, the Business Forum with communications specialist Sandrine Rattan. Good afternoon, Sandrine.
Good afternoon, Chris, and it's good to be here. Good afternoon, Trinidad and Tobago, and to our listeners on the World Wide Web. Special greetings to our international counterparts at Standard & Poor's out there in the United States who are tuned in at this time. This afternoon, we have a special edition of the Business Forum, which I'm convinced will be of tremendous benefit to all our listeners. Our program will focus on the work of Standard & Poor's, a U.S.-based organization which I'm sure most of you are familiar with. But more importantly, at the end of the interview, you would definitely have a greater understanding of not only the work of the organization, but also the socioeconomic impact which it has on economies worldwide. I'm pleased to have as my guest Mr. Joydeep McClergie, who is the Director of Sovereign Ratings Group at Standard & Poor's. He is a team leader for sovereign ratings in Latin America and the primary analyst for Argentina, Mexico, and Costa Rica. Previously, he worked with sovereign ratings in Asia. Prior to joining Standard & Poor's in 1996, Mr. McClergie worked for 5 years in both corporate and investment banking in Canada with CIBC Wood Gundy. He also worked as an economic consultant to the Asian Development Bank in Philippines and briefly as a financial journalist with the Globe and Mail newspaper in Toronto. Mr. McClergie received his BA in economics from the University of Toronto and his master's in public policy from Woodrow Wilson School of Public and International Affairs in Princeton University. He speaks French, Spanish, and Bengali. There you have it, ladies and gentlemen, a very interesting profile of Mr. McClergie. So we go straight in line to Mr. McClergie. Mr. McClergie, welcome to the Business Forum. You're live on Power 102 FM here in Trinidad and Tobago, and a big welcome to you, sir.
Thank you very much.
Good. Mr. McClergie, Standard & Poor's is one of the big 3 credit agencies in the world. But for the benefit of our listeners, what exactly does the organization do? I know we'll get into details later on, but just to give, a basic appreciation of the organization in terms of its work.
Yes, well, credit rating agencies started a long time ago, actually in the 19th century, and they filled a need in the market because, on the one hand, you have companies that want to issue debt, issue bonds, and on the other hand, you have investors who want to invest in that debt. But it's difficult for a particular investor to do research on a wide range of companies. And it's also difficult for a company to give an objective assessment of its own creditworthiness because obviously people are going to think it's too rosy. So there is a need in the market for an independent third party to come in and say, look, we will do the research on lots and lots of different companies and provide our own evaluation and opinion about whether or not you're going to get repaid on this bond if you buy it. And you assign a scale of highest to lowest. And this allowed the market to become more efficient because it meant that investors, even large investors like banks, which could have a lot of researchers working, they could get information from a rating agency instead of having to duplicate all the work. And similarly, companies could devote themselves to their own business rather than setting up a huge unit to propagate news about themselves to the rest of the world. So the industry has grown from the 19th century in the U.S. when it started off with railroads, for example, that were issuing bonds to investors, to a variety of different types of companies and corporations these days, and finally into sovereigns as well. For example, Standard & Poor's rates now 127 sovereigns around the world. Plus we rate banks, local governments, city governments, provinces. It's a much bigger industry, but the principle is the same, that you have an agency which is not investing in the business, nor is it selling a bond or a debt to somebody else. So it has an independence from both those parties and can offer an opinion. And because it's a private company, it's not a government agency, it's not a political opinion, it's sort of based on their own analysis of the ability and willingness of the company to pay its debt.
Yes, yes. And therein lies the objectivity of the ratings that you would assign to the various economies around the world. Yes. Mr. McClergie, I would like us to talk about the core business of the organization, which of course you indicated in your preamble, which is credit ratings. And I know that the company rates borrowers on a scale from AAA to D. Briefly explain to our listeners the process used to determine which rating is assigned to particular borrowers, and perhaps in your response you could also indicate whether or not there are consequences depending on the particular rating assigned.
Yes. We set up a scale, and I guess other rating agencies set up their own scale, and just to create a little more confusion in the market, we use different scales, so that it would be too easy if we all use the same scale. But in our case, for Standard & Poor's, we start off with AAA at the top of the scale, and then you go to AA plus, AA minus, single A plus, single A, all the way down to the D category. And basically, it's just a bunch of steps on a ladder, you can think of it. And the highest meaning that compared to everybody else, you have the best ability and willingness to service debt. And the lower you are to the bottom of the scale, obviously, the greater the risk that you will not be paying your debt fully and on time. Now, somewhere in the kind of the middle of this rating scale, there's kind of a line that's drawn to divide the ratings into two groups. One is called investment grade, which is the top half, and the other is called the non-investment grade, which colloquially people call speculative grade. And this was something that was done a long time ago because there was a time when pension funds and other investors were very, very conservative in what they would invest in, and they tended to restrict their investment to bonds that were rated at least in investment grade, above that line, and of course more towards the higher end of investment grade. So that's the scale that we use. Now, how do we actually do a rating? The process is quite similar, even for ratings that are quite different. For example, I worked on the ratings of Trinidad and Tobago. I've also worked on ratings of banks and corporates. And basically, the idea is that we assign an analyst, we assign a backup analyst to the credit. They go, they visit the company, or in the case of a sovereign rating, they visit the government. They accumulate all the data that's available. They talk to management of the company or the bank, or in the case of a sovereign, they'll talk to people in the government, including sometimes finance ministers, central bank governors, or in some cases even prime ministers. We also talk with journalists off the record to find out their opinion. The team brings back the data, crunches the numbers, and writes a report. And then we have a rating committee. And I think this is how the process is, viable, because it's not a decision just made by someone who goes and visits a country or a company. It's a decision made by a group of analysts who all do the same work, but perhaps are covering different countries or different banks or different companies. And the team has to present a report with lots of numbers and lots of words and make a recommendation as to what the rating is. And the recommendation is based on criteria that we have for rating different types of entities. And that criteria is available on our website. People can see it, and so it's not a black box. And we have a discussion. It could be several hours in a conference room about what the rating should be. The team has to answer lots of questions from their colleagues, and ultimately there's a vote. And just sort of like a cabinet decision in government.
Yeah.
It's a majority vote, and once the vote is done, everyone then has to agree with that rating decision, and that's what's announced to the world. So the idea is that the rating decisions are made by other people who do the same work, in other words, your peers. So that someone who's working, for example, in banks or with banks in the Caribbean will be attending a rating committee rating banks in Canada or Brazil and looking at the same thing but bringing in outside experience. So then we produce the rating and announce it. What does it mean for most people? I think what we've been telling the market and what generally has happened is that we're telling people credit rating is one element that people should consider when looking at investment decisions or other decisions that have to do with where to put your money. We don't recommend that you buy or sell any particular bond. We ourselves don't buy or sell bonds. We're not like investment banks or mutual funds or others. We just basically provide the rating and then we go home. That's it. We make our money and our profit from just providing that opinion, not from investing. But others who do make money investing or selling the bonds look at the rating as one element of their decision. In other words, they might see that there's a profitable investment opportunity somewhere. They might see whether that bond is trading at a good price or a bad price. And they may also consider what S&P says about creditworthiness of that bond. But what we say would be just one element of many things that people would consider before making an investment decision. Because we're not saying that a particular investment, for example, is profitable or not. You could buy a bond, really not make any money on it because the price of it goes up or down in the market, but nevertheless the rating could be very high because no one's afraid that the person won't be able to pay his debt. But many other factors influence the price, not just the ability to willingness to pay debt. So we are quite far removed from profitability. And that's why sophisticated investors generally look at the ratings and take that into account among many other things to make their decision. So that's the role we play in the market. And unlike perhaps the stock market, or even if you're looking at the interest rate spreads on bonds, which change every day, change every hour, every minute as news comes in, ratings tend to be sticky. We are looking at long-term events. We don't want to change the credit rating of a bank or a sovereign government 3 times a year. If we did that, then we've done a very poor job. We tend to kind of look at long-term factors, meaning that the rating could change certainly every couple of years, hopefully not faster than more than once a year, unless there's a crisis. But we don't want to change the rating every 6 months. So in that sense, we are kind of providing ballast to the market, giving a long-term view, which complements other things that people look at, which are more of a short-term nature.
Yeah. Mr. McClergie, please stay on the line while we take a short break. When we return from the break, we'll discuss the recent downgrade of the United States sovereign long-term rating.
Okay.
Take a break and invest a minute with the UTC. You'll be glad you did.
The stock market has its ups and downs, but shrewd investors make these changes work for them with dollar cost averaging.
Over time, averaging, you invest a fixed amount regularly. This lets you buy more units when the prices are low and a few units when the prices are high. The result is a lower average price per unit.
Here's how it works. You might buy $300 units worth of unit every month. 1 month, the price might be $10 and you'll get 30 units. The next month, the prices might be $12 per unit and you would get 25 units. The average price of the $600 worth of units you bought would be $10.90.
The UTC's Growth and Income Fund is ideal for dollar cost averaging. It allows your investment to grow faster, all while taking advantage of the swings in the unit prices. With almost 30 years of financial expertise, we know a thing or two about stock market and other investments. Come in and talk to us today. Unit Trust, for safety, strength, and stability.
Welcome back to the Business Forum on Power 102 FM. If you have just tuned in, my guest is Mr. Joydeep McClergie, who is the Director of Sovereign Ratings Group at Standard & Poor's out there in the United States. Mr. McClergie, welcome back.
Thank you.
Mr. McClergie, the United States sovereign long-term debt rating was recently downgraded from AAA to AA+. And I know that that issue has been receiving much global attention. But tell us, what were some of the main reasons behind that decision?
If you put it kindly, that we've received attention, we've received a great deal of criticism from the U.S. and elsewhere for the decision to downgrade the U.S. from AAA. Obviously, it was a shock to the United States as well as the rest of the world because we've all been used to the idea that the ability and willingness of the U.S. government to pay its own debt is the highest in comparative terms. And we usually, before we change a rating, we like to signal possible change by assigning an outlook. Outlook is just an adjective to say we think there's a chance a particular rating could go up or down. And in the case of the United States, earlier this year, in 2011, we assigned a negative outlook to the United States rating, that time AAA, because of problems in obviously with a budget deficit and growing debt. And then in August, I believe it was the 5th of August, we downgraded the rating from AAA to AA+, and we assigned a negative outlook to the new rating. So it was a one-notch downgrade, and there were basically two reasons behind it. One has to do with the numbers, and one has to do with politics.
Yeah.
The numbers are very clear that the recession in the United States has had a huge impact on government revenue, and it's going to take some time for revenues to bounce back as the economy is so slow. But in the meantime, the debt keeps rising, and under most reasonable scenarios, we don't see the debt cresting and stabilizing at some point. So right now, it's still an upward spiral. And so that the quantitative factor certainly had an impact. The other factor is, the U.S. still is a very strong country, and it has the capacity to take remedial action to deal with the problem. And we thought there would be at least some steps in that direction this summer. And then we had this whole episode with the debt limit of the U.S. government, which your listeners may remember when the government came very close to shutting down because it wasn't authorized to spend any more money because it needed more debt. Anyways, that whole episode led to a plan to try to somehow control the budget deficits going forward. We looked at that whole episode and said that there has been a deterioration in the ability of the U.S. political system to deal with these matters on a timely basis. This is not a criticism of American democracy or one political party or the other, because power is widely shared in the U.S. and both parties and all branches of government have to really agree on anything important. But there was just a lot more partisanship and, I guess, inability to come to an agreement even when everybody understood how grave the situation was. And that was a factor. There's a political evaluation here, not an economic one, to say, well, I think the response of the political system has been less than what we had been expecting. And that made us a little bit more pessimistic about the ability of the government to get a grip on the growing debt problem. So those two factors, the numerical factors, the debt getting higher as a share of GDP, and the politics, led us to make that decision back in August. And we still have a negative outlook on the U.S. rating.
Okay. Mr. McClergie, let's just shift focus now to the regional economies. And I know just over a year ago, Standard & Poor's advised that economic activity in the Caribbean had increased, with some countries taking advantage of international capital markets in the context of foreign direct investment. But what is your current position in relation to measures which have been put in place to treat with medium-term recovery in the Caribbean?
It's actually it's a mixed picture. I think. I mean, the Caribbean region, unfortunately, is being hurt again by all the uncertainty in Europe and the sluggishness of the U.S. economic recovery. Although in most countries the tourism numbers have been picking up, and there are still quite a few projects that are underway. Obviously, the outlook globally is not as rosy as it had been prior to 2008. So we just take that as the background when we look at individual economies in the region. And I don't want to generalize across a pretty diverse region, but there are some countries where the level of debt of the government is fairly high as a share of GDP, and this worries us because being small, open economies, often with a fixed exchange rate, or if it's not officially fixed, it's really de facto, it's not very flexible just because of the nature of the economy. Under those circumstances, we pay a little bit more attention to fiscal policy, the budget deficit, and the level of debt. And this has worried us in a couple of countries. On the other hand, we do have quite a few ratings in the Caribbean that are in the investment grade category. So I wouldn't generalize across the board for this, but obviously everyone's being hurt by global uncertainty. But I think many countries have done their best to diversify as much as they can and to build up, some sources of resilience, so that barring a very, very unexpected catastrophe elsewhere, I think the region can tough it out and hopefully count on a little bit of luck in the next couple of years if Europe gets over its problem.
Yeah. Mr. McClergie, I'm sure that Standard & Poor's continuously engages in obtaining market intelligence on various economies, both globally and regionally, in terms of their economic resilience. But I know you spoke about the process, but I'm listening to you, and I'm just thinking in terms of how does Standard & Poor's identify the specific economies to target in terms of doing the analysis, to assess, to give the ratings?
Typically, we work with the government in getting the ratings. In other words, just to give an example, just a couple of days ago, Curacao got a rating from Standard & Poor's. A few years earlier, its neighbor Aruba got a new rating from Standard & Poor's. Both those governments have their own reasons for getting a formal rating from us. They contacted us, we discussed it, and then we went ahead. So that's usually the case, that governments either they want to borrow from abroad and they see the value of a rating from Standard & Poor's, or sometimes they may not necessarily want to borrow from abroad, but they see that a rating might be helpful as a kind of a independent opinion about the country, and especially countries which are not well known. I mean, everyone will know about a Brazil or a China, but not everyone will know very much about Curacao. So sometimes a rating shows the world that, look, there's an independent pair of external eyes looking at the place. So we tend to work with the government, and we also try to develop a network of contacts in the country once we've established relations with the government. And we stay in touch with people. We follow developments in the local newspapers through the internet now. It's pretty easy. And beyond just visiting the country, we talk to other people who sort of fill us in. So nowadays, with the globalization, between a few emails and a few phone calls, you can be pretty well informed what's going on almost everywhere. So it's not that hard to basically know when something has happened, whether it's time to make a quick visit or to review the rating. But in general, I think the relationship works because the governments themselves are open to us, and they come to us for a rating, and we work with them, and we certainly share our methodology with them so that they're not surprised by what we do.
And from what you have alluded to earlier, Mr. McClergie, I suspect that when you do your analyses of the various economies, you would make certain recommendations in terms of the particular interventions that are required to improve the rating, and I'm sure there is some level of adherence as well as challenges. What could you say about that?
Yeah, we are very careful how we phrase this, because we're not an international agency, for example, like the IMF or the World Bank or the Caribbean Development Bank. We are a private company, and we're regulated by governments, and we cannot give advice. What we can say to a particular country is that this is your rating.
Yes.
Here are the reasons for particular rating. And we can cite those factors which could help raise the rating and those things which could potentially lower the rating. But we stop there, and we leave it up to other people to draw whatever conclusions they want, because we don't want to say to a company or to a bank or to a country that you should do this.
Yes.
We'd rather say this particular factor is now restricting your rating at the current level. If this were to change, become easier or whatever, then the rating could go up. And we leave it up to other people to draw that, because it's a fine line between giving advice and making an independent judgment and stepping back. And I think most governments understand that, and there are plenty of other people in this world who are giving advice. As someone who's been all over the Caribbean and listened to talk radio, I think there's no lack of advice for governments in the Caribbean.
Mr. McClergie, there is a lot more that I had scheduled for us to discuss, but I'm looking at the clock on the wall and we're running out of time. Certainly not out of content, but if, what would be your closing thoughts as we approach the end?
I think that the world is not only getting smaller because of globalization and people like Standard & Poor's looking at more and more countries, but it's also getting faster. So when things happen elsewhere, if it took 6 months to have an impact on the Caribbean before, now it takes maybe 6 days. So I think that all of us are in a kind of a different world where reactions are faster and unexpected, and every one of us is trying to keep up, whether it's a rating agency or companies or governments. And it just means that we need to have more knowledge and transparency to react, because we have less and less time, all of us, to react to changes. Who would have thought 10 years ago that events in Greece could possibly have an impact on countries in the Caribbean? So this is not really about Standard & Poor's, but it's about all of us. And we are certainly trying to adapt to that new reality and make sure that our ratings are timely. But of course, it's a difficult challenge.
And I think it's the new global evolution in terms of our economic scenarios around the world.
I think so, and one of the things that's coming through around the world is that transparency and institutional strength are very, very important, because you can see that lots of countries have a high level of debt, but it's how institutions react and how transparent and predictable they are that really determines things. And I think this is also an area, we haven't talked much about it, but the Caribbean is, there's room for improvement. But I think if you look at some other countries south of the Caribbean, you find institutions are often weaker. So there's an area where I think the Caribbean, if it strengthens its institutions, can at least have greater ability to respond, because unfortunately the region is always going to be at the receiving end of events elsewhere just because of geography. But I think there are some advantages there, some strengths in the region, which I see comparing it with other parts of the world.
You're correct. And I think, Mr. McClergie, is a balancing act whereby economies, again, both regionally and internationally, have to ensure that they maintain the economic resilience to deal with the global evolution that, you alluded to earlier.
Yes, and, to the extent some countries, such as Trinidad with the Heritage Fund, or other countries or other things can build up a rainy day fund. I mean, now more than ever, we can see that the Italians and the Spanish sure wish they had built up a rainy day fund back in the 80s and 90s. So it's difficult to do, but I think, we kind of see these decisions with a different set of eyes nowadays.
Mr. Mukherjee, it was indeed a pleasure having you on our shores here in Trinidad and Tobago, sharing with us the important work and role of Standard & Poor's and how that work impacts on our economies both regionally and internationally. And we will be chatting again because, you know, my research and my monitoring of the organization tells me that you all are doing quite a bit, and there is a lot of respect by many in terms of Standard & Poor's. So I want to wish you good luck, both you and your management team, and we will chat again.
Thank you very much.
You're welcome. Bye-bye.
Bye.
There you have it, Trinidad and Tobago, Mr. Joydeep McClergie, Director of Sovereign Ratings Group out there at Standard & Poor's in the United States, sharing with us quite a bit in terms of the work of Standard & Poor's, and I'm sure, as I did indicate at the beginning of the interview, you all will be more edified and you know, in tune with what is happening out there in terms of the work that organization does. Very, very important. And as I said, we will be chatting with Mr. Mukherjee sometime in the near future. Stay tuned to Power 102 FM because we have some very interesting and very important programs lined up. So goodbye for now.
Take a break and invest a minute with the UTC.